Well, back in the saddle once again. Welcome back to Krown's Crypto Cave. It is a nice, bright, and early Sunday morning over here from a bright and sunny Helsinki, Finland, as we get started for the end of the weekend, of which Bitcoin's been going in a straight fucking line. Don't you feel just grand about watching this massively cool asset go directly east? Me too. Me fucking too. Jesus Christ, man. Let me just rethink my whole life right now as we look at Bitcoin price action once again. Anyways, looking at the Krown chain application here, we do see that the open interest is still hanging around that $2 billion marker. I don't really have much to make out of that until we see a break of the higher term time frame range, the same range that we've been looking at for almost 3 fucking months now. Hey, if you've been watching these videos for the last 3 months, you can probably go back. You can probably go back to the start of that, and it's more or less the same. It's more or less the same. 9,900 to the upside and 8,900 to the downside. The downside has changed. And to be fair, I do want to follow up on the short and medium term timeframes today, because there actually has been changes in those as far as documenting the next sort of change behavior from that perspective. So with that in mind, we also do see that crypto fear and greed index currently ticking out of 41, literally unchanged from yesterday. Bitcoin dominance 62.5%. I believe that's unchanged as well. I do want to take a look at that today, because I do feel like we're seeing something interesting going on there. There's some bifurcation in this market going on, because the strong alts are showing their hand. The weak alts are not. They're not. They're just going sideways too. Anyways, let's get to the actual price action analysis right here as we get into it right now. And what's significant about the last couple of days of price action is that once again we have confirmed another lower high right here at the 94.50ish level, and that's significant mostly because it gives us another area to kind of be managing off of. At least this is not financial advice. I'm not a financial advisor, but if I was explaining my own trading behaviors, that's what I'd be managing off of. Although to be 100% direct and clear, I am not trading this, especially versus spot right now. I will put on some spreads once again with options once the real trading week starts. But on Saturday and Sunday, I'm not fucking interested unless if it's something that's very obvious. Of which the very obvious things would be to come back down below 8,900 or even 9,000 at this price point on a daily total closure, or above the last prior high. So what's sort of the point that I'm making here? Well, let me pick up a fresh chart. Okay, this one's completely fresh. Okay, perfect. So what I'll do now is I'll move down the goalposts once again to represent Bitcoin's inability to really do anything different. But what was once the 10,200ish region right here as a critical point, then got moved down to the 9,900ish region, of which we had that nice liquid zone, which I do believe this one is pertinent to the greater long-term analysis. Again, that 9,900ish level, but with each and every passing lower high that Bitcoin's put in, we can move down that sort of change of behavior point just another degree essentially. So of course the next one after that was down around 9,700. Then Bitcoin instead of giving another test on that last run up to about 9,500ish region, Bitcoin puts in another lower high here, following the same trend line that Bitcoin's been putting in since about 10,000 in early June. So a little bit more than a month running now, about a month and a half almost. And while I don't necessarily trust diagonal trend lines all that much, you'll naturally notice that each and every one of these diagonal trend lines does match up with the horizontal. And that's why I standardize for that at the end of the day. It's just easier to use that tool and have less ambiguity with it. So I'll take that off for now, but for the purposes of thoroughness, probably should show it. Anyways, my point is that as long as Bitcoin's now below this lower high right here, can I be bullish from even a medium-term time frame perspective? No, just like before, we were using 9,700, same sort of thing applies. Now to the downside, it's a little bit more dubious, because it's hard to get super bearish here. It's also hard to get, it's hard to get super bearish here looking for like a 50% down, but it is also within the realm of possibility to be looking for $1,000 or even $2,000 move to the downside if Bitcoin does break below the critical pertinent areas to the downside, which I would argue on a daily closure is going to be 9,000. On a 4-hour closure, probably below the last wick low at about 8,900ish region, somewhere right around here looks about right. We could probably put in a nice liquid zone right there, and because this is being operated off on a daily, I think $100 delta between the two is completely fine. And that's where the downside really gets interesting, just like the upside really gets interesting as far as the higher term timeframes go above this blue box right here. So in the interim, that gives us a nice little short-term timeframe range to be playing out. And with Bitcoin mostly trading sideways here, I'd expect a few more tests down to the $9,000, $9,100 low. And now that we have our next our lower high in right here, we can use that as a management point as well. So if Bitcoin does get above this area, if Bitcoin gets back above, let's call it 94. I'm curious what the closure was on it for. I think it's 94.50. Yeah, it's 94.50 actually. Perfectly right there. Perfect. Great. Actually, I love the confluence. But if Bitcoin can get back above there on, at the very least, a 4-hour total closure, maybe even a 2-hour does it at 94.50, or a wick higher than our highest wick right here, which is pretty much 9,500 to the T, depending upon which exchange that you're looking at, then I would look for a move up to the next level, back up towards about 9,700. That is relevant to be to be playing for, mostly because we would be at that point initiating hidden bullish divergence on, I believe, the 3-day at this point. Yes, indeed, we would. So you see the 3-day chart right here, kind of tying these two together. We do see that hidden bullish divergence is actually very much apparent here between this point, and this point. That would be the 9th of May, the 24th of May, and then more recently the 26th of June. So we do have higher lows along that whole schedule at the same time. So if we were to initiate that hidden bullish divergence, I would look for a move back up at the very least to 9,700, and probably the top side of the overall range for this area, which we were just looking at right here as the blue box at about 9,900-ish region. That's where the high term time frame breakout does become very, very interesting, as realistically, I would be looking for moves to 10,500, 11,000, but ultimately probably 11,500 before the next big potential pullback, at which point there will be another probably long form consolidation, which you gotta love it, man. If you're gonna trade this asset, you gotta fucking love that, because, well, that's what we've been doing for the last 3 months, and everyone seems to be fine with it. Well, maybe not. Maybe not. Anyways, I myself have been looking at Forex a lot more recently, and traditional markets, which I think are just a lot more tradable right now, and in general, and, well, you don't need to make the game more difficult than it needs to be. And this channel is, as always, focused on traders and trading, not necessarily an asset in particular, although I do typically focus on Bitcoin, because Bitcoin's the only game playing on the weekend anyways. Oh, nice. Sent over there. Cool. Anyways, the point that I was making there is that, during the actual trading week, I'd much rather look at traditional markets, because, well, there's no one saying that the game needs to be harder or easier than it already is. And if I can make it easier, I'd rather trade traditional markets right now, as they are trending pretty damn heftily to the upside. Don't need to be a fucking genius to make money in that market right now, just like Bitcoin in 2017. In fact, a lot of parallels to be drawn there, which we'll talk about coming into probably after Monday, maybe Tuesday morning on this channel. Anyways, so for what it's worth right now, it should be noted that daily momentum is starting to wane a little bit here. We do see that daily Stokes are potentially threatening a curl to the downside, which would also be interpreted as a rejection of the bullish control zone. So two of those things coming in at the same time. Let's see what price point would be needed for Bitcoin to hold up above in order to maintain the momentum of the upside on the daily, and that is shown at 92.25. So as long as Bitcoin is closing daily dollars above 92.25, probably does have another chance to potentially test that 94.50-ish region, at which point that's where the medium-term timeframes can change, for allowing for a move up to about 9,700 and probably 9,900, keeping in mind the 3-day hidden bullish divergence. By the same token, if Bitcoin does close today's daily dodo anywhere below 92.25, I would be looking for another test down to the $9,000 region at the very least, and maybe even all the way down to the lower echelon of that blue box at 8,900. You never know where those stray wicks get. But perhaps we can go down to a time frame that's half that at the 12-hour and come up with a little bit more of a sophisticated way of doing this. And we can see on the 12-hour right here, momentum is technically down right now. I don't see any trend lines here of note, and the only trend line that I do see potentially forming is actually coming in all the way here, which would imply that it's going to come like around the bearish control zone, which would be quite interesting. Now, a few different things on this chart that really stand out. So on the 12-hour, we do have hidden bearish divergence, right? We do have higher highs on RSI oscillator with lower highs on price action, significantly lower highs. I mean, 9,700 versus 9,450 right here, right? And has that hidden bearish divergence played out already? Well, Bitcoin did get a nice move down from about 9,500 to 9,100. Is that enough? I mean, that's 4% move. That's pretty good, but I would expect a move to the official downside range of about 9,000 if that is to play out. So what can we come up with for this? Well, it's the same thing as looking at the daily, just taking it, by half of a degree, if that makes sense. Probably doesn't make sense because I'm massively underslept from last night. But basically, what I'm looking at here is 12-hour momentum remains to the downside as long as we close this next 12-hour delta below 93.37. Why is that significant? Well, that would be your continuation point or reversal point for a very short-term time frame trade. At the 9,300-ish level, which would be your low-term time frame last prior high right here, right? Hopefully this is all coming out properly right now. Feel free to stop me if it's not. Well, this is a very one-sided conversation, so go fuck yourself. No, just kidding. I should go fuck myself though, because well, could use more of that in the world right now. Anyway, so what that essentially suggests though is that as long as we're closing below that level, the pressure is onto the downside from the 12-hour perspective, which can then obviously transpire or flow over to the daily if we close below that same critical level, which is 92.20. So 12-hour turns first. Obviously, it's a lower term time frame, and it will remain to the downside as long as we're below 93.37. Then after this next closure, we get both the 12-hour and the daily at the same time. At which point, if it closes below 92.20, which is essentially around where we are right now, a little bit higher, we're about $40 above that area right now. That would be the next sort of obvious thing, suggesting that we will come back down and play out that hidden bearish divergence on the 12-hour and swipe around 9,000 or 8,900 and potentially even break fully to the downside. How would you denote a potential full break to the downside? Just the same thing as what we were talking about to the upside, but with the relevant area to the downside below this blue box territory right here in this $100 range between 8,900 and 9,000. A daily delta closure below there, which is also synonymous with the daily 89 exponential average. And I would be targeting to move, there's going to be stops along the way, but ultimately at the very least, I'd be looking towards 8150-ish region, of which I think that we have a massive major fib in that area, that the 382 from the ultimate high to the ultimate low of this last sort of move that we saw. And while I do think that Bitcoin would bounce there and probably even bounce along the way, short-term bounce at 8,700 and perhaps a medium-term bounce at 8550-ish region right here, I do think that 8150, the 382, could have a chance to reverse it. This would also be in line with, I believe, the weekly 55. Yeah, it's in that region. But more importantly, if we go to the monthly and the bi-monthly, there's a lot of things to be aware of right here. So for the monthly, that would be around the 10 simple, low 8,000s. And for the bi-monthly, which the bi-monthly looks very good, that would be the 10 simple. Now that again is very sombering. It's a very sombering thought, because while Bitcoin does look rather bullish here on the higher term timeframes, like the monthly, like the bi-monthly, and especially the quarterly as well, which won't be closing anytime soon, but it is of note. Because Bitcoin's at such a high number here, the ranges are naturally bigger. So if you are going to be a trader or even an investor, does that mean that you just blindly get in at these levels? Well, if the risk is fine for you, then yeah, I mean, who am I to say that that's right or wrong for you? I can only give my opinion on that, and then you can decide for yourself, as should be the way. But for myself, looking at a big range right here, it's very interesting to see that Bitcoin could come very easily down to the low 8,000, even the mid or low 7,000s, not destroy the long-term structure as far as this goes, and get picked up, and that would be, that would be maximum opportunity. Now, of course, it could also be that Bitcoin just completely fails and goes back down to fucking 3,000, 2,000, 1,000, 0. But that's not my main interpretation of a chart that looks like this. This chart is obviously bullish over the long period of time. It's just, we could very easily afford a 30 to 50% downturn and maintain that structure, which makes it, difficult to difficult to trade in the immediate moment if you want to take a long-term position. The ranges are just too big. The risk is not acceptable from my perspective. For you, that might be different. It might not be different. I can't make that decision for you. You're an adult, or you're likely an adult, and you're more than welcome to make that decision for yourself. Also shown on the quarterly, Bitcoin does have a higher low in place, of course. Did we actually take out this high right here? No, just barely. 10,500 is going to be a critical point, by the way. If Bitcoin gets back above 10,500, even just ticks above there, very, very likely we will see 13,000, 14,000 again. Very, very likely. But again, big range here. I wouldn't mind a test back down to the low 7,000s or mid 7,000s. It's not going to destroy the structure. It would be barely even grazing the 10 simple. And I'd look at that as an opportunity. So that's really the picture that I want to be painting here. Everyone's rather bullish on Bitcoin, and I could very easily be bullish on Bitcoin too, but I'd rather go level by level here because I do not want to get stuck in potentially a long-term long at these levels if I do think that Bitcoin could very easily come back down to low 8,000 or even mid to low 7,000. For some people, that's going to be fine. For some people, that's not. Again, personal thing, and I'm just sharing my my disposition on that. Maybe it's relevant to you, maybe it's not. I don't know. We're all different, of course, but as it stands right now, it does look like Bitcoin's a little bit more geared towards a short-term test to the downside at 9,000. So perhaps I might actually be right on that read on Friday, which I gave myself a lot of shit for yesterday. But we'll see. We'll see how this one goes through. It's been mostly sideways here. Hasn't really been too much opportunity, unless if you're trading options right now, or if you're trading like very short-term timeframes, of which, hey, more power to you if you're making money like that and doing well. I got massive respect for you, massive respect for you, but this is not my game right here. I'm not interested in this. So, it's kind of wrap up that point. Lower highs, typically we get lower highs at the end of the day. I'm curious how the 2-day momentum oscillators are shaping up right now as well. We do see 2-day Stokes to the upside. However, they are going to be testing the edge of the bearish control zone. So if there is going to be a counter trend attack here, that would be a damn good place. Looking at the 3-day, we do see still nosediving actually. Now, what's interesting about the 3-day? Well, we do have this trend line right here, which Bitcoin will be testing relatively soon. Either you could even say that it's testing it right now, but I would say certainly on the next tick, which we get tomorrow night at 8 p.m. Eastern time. So keep an eye on that. Not tonight, but tomorrow night. And the reason why that's significant is because if we look at the reverse Stochastic indicator cross, we can see that any sort of a closure above the 21 exponential moving average, and we will naturally turn that momentum back up to the upside. So it would be not just a rejection of the bearish control zone, but also fulfilling that trend line test. And actually, now that I pull it back a little bit further, I realize that there's a couple of trend lines here. They both work, and here's why this really needs to be looked at as a regression rather than like law, so to speak. And the purpose that the picture that I'm painting here is essentially that it really should be something like this. You don't need to be exact with these things, especially on Stokes. On RSI, yeah. On price action, yeah. On Stokes, not as much. It's more of a regression, and in that case, we could very easily make the case that would be a test of it. And more importantly, if it does cross, if it does conclude a cross back up to the upside at this level, not only would we be defending against that area on the Stokes, but also the 21 exponential moving average on the 3-day. And remember, that's also still going to be in line with the potential 3-day hidden bullish divergence, continuation divergence that we identified at the beginning of this video as well, which will be confirmed for a move back up to the high 9,000s, potentially even breaking out to 11,000 and beyond, with a move above the last 3-day high at 94.79.57 on stamp, and it's basically like a few shades below 9,500 on all major exchanges from what I've seen. Okay, all right. Let's see, what other bullshit can we look at on the weekend? Let's go to a 10-hour. I really like the 10-hour chart, by the way. Not really giving us too much right here, literally just a line. What about a 4-hour? What's a 4-hour looking like right now? Chopping around the 200 exponential moving average. I mean, well, masturbation with sandpaper or trading Bitcoin on a Saturday and Sunday. Ugh. Fuck my asshole. Let's go look at the reverse Stochastic indicator cross. Will remain to the upside. As long as Bitcoin's above 91.70 on this next tick. So that is interesting. That is certainly interesting. But I don't really trust this time frame over a weekend. 3 hours showing downside pressure as long as we're closing below 92.70. Literally look at this. You know what moving averages do? They average out price action. You know what it says when all major moving averages are parallel to each other and fucking sideways? Price ain't moving. Price ain't fucking moving. Although it is winding up for a pretty damn big move here relatively soon. But the 2-hour officially confirming another lower high right here if you want to get super specific, and momentum will turn back to the downside below 9,200, so keep an eye on that area as well. 9,200 should be a good inflection point if you are going to trust in these lower term timeframes. I myself would not be, especially on a weekend, but fair enough, for the purposes of thoroughness. See the same thing on the hourly as well. In fact, it's already turning down on hourly momentum and will remain to the downside as long as below 92.71. And this would be your next lower high. If you're just following this area right here, high, lower high, lower high, lower high, lower high, right? And that goes all the way up to the 4 hour that you can see right here, potentially putting it in, but still need to see a few more closures plus confirmation on top of that, confirming this, as a nice stop and reverse point. And then, probably comes back down to 9,000 or 8,900, whatever it ends up being. But that does not mean that I'm suggesting that we're going to see a breakout to the downside from this price point. Do not underestimate the ability for Bitcoin or any asset for that matter to go sideways indefinitely and just bore the ever-loving shit out of people. However, I do believe that we are going to be looking at resolution on this formation sooner rather than later. I know I've been saying this for a while. Probably just sounds stupid at this point, but I do sincerely believe this, not because, TA is an infallible science. It's not at all. It's more of an art than anything else. There's science in it as well. Statistics and everything, but that's really the difference between a lot of people who I see succeed with it or who don't succeed with it, is the sense is like understanding that the map is not the territory. Yes, we have a map. Yes, we have statistics to go off of, but you need to be able to identify specific situations. Anyways, looking at the daily right here, volume signature is incredibly mature. There's very little space left in here. Will be forced into a decision in less than 10 days, 21st or 22nd of July of this month. So in about 9-10 days, sometime probably around the end of this week is where I'd guess. And any time before then is extremely likely. It's been extremely likely statistically speaking, again, understand the word statistics, I can't speak. After it gets about 70% full, which was probably around here, which is definitely more than 70% now. So technically speaking, it is more likely, and we can take that a step further by looking at historical volatility percentile, and same thing here as well. We're very, 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 very likely due for a test of the long-term regression trend line here, coming in around the 50 marker, which we have, for perspective, have been so low on historical volatility percentile, a mean reverting indicator, which suggests that we're going to see an explosion sooner rather than later. Again, it can happen at any time, statistically speaking. It just says have that red light in the back of your mind, because or have your alarm set, because the moving average on this is starting to get a positive slope once again. It's starting to maintain around the 10 reads, still single digits, still around an 8, but overall, usually when we do see the moving average on this start to turn up, as it does like actually get down towards the reads themselves, that's when Bitcoin starts moving. For example, late September 2019, before this major move here from 10,000 to 6,000, a few months later. Before that, we have this example right here, not even as aggressive as what we see right now in March 2019, precipitating this whole move from 4,000 to 14,000. Before that, we have this whole dilemma here in 2018, getting extremely low before the next 50% move to the downside. So all these things work together, and yes, we are going to be looking at a very big move relatively soon. I'd say, I know I said last week, this week probably as well. Again, understand statistics. This is not me saying that like it's happening at this date, at this time, and no ands or but about it. It's just, it's likely. It's fucking likely, man. Especially once New York Stock Exchange opens up for the real trading week. Okay, what else do we want to talk about here? I feel like I'm missing some. Yeah, let's go back to CMEs. Remember that CMEs closed the week out at 92.75. They do have about a $50 premium on spot price action. And, the weekly gives us a very easy way to be looking at this as well. If you're bullish, you're looking at this as your last low. And so you can manage there as well at 89.50, wick down. On spot price action, it'd be 8,900, it looks like, although it's a little bit different looking on spot. I'd be more conservative on spot and say 88.50. But going back to CMEs right here, if we also take out the high of last week's wick at 97.70, I'd be looking for a move back up to 10,000 essentially, and probably beyond, and that would be the bullish look on it. So if you are bullish, that's likely what you're focusing on. If you're bearish, you're looking at this as, okay, we are rejecting the 10 simple, nice wick to the upside, rejection to close out the week, and likely to turn down momentum at the same time with the weekly Stokes crossing below the critical zone, which has produced the last major pullbacks in Bitcoin, all of the major pullbacks in Bitcoin's history. Now, obviously on CMEs, we don't have that much history to go off of, but we can look at spot price action. And anytime we see this read where Stokes get above the critical zone and then come down, that's the key point. It's a key point. Well, I'll just give you the results here. This was the last example right here. This is where they started to turn back down, 43%. Plenty of examples right here, and because I've done this a million times, I already know them by heart. But I'll measure them out nonetheless. This one right here, 65, almost 65% down. This one right here, about 30% down. This one right here, about 38% down. This one right here, 39% down. This one right here, 32% down. This one right here, hey, you motherfucker. There we go. 33% down. This one right here, 42% down every fucking time. Now, has this been confirmed on spot price action just yet? No. And if spot price action does close above the 10 simple, I would be skeptical that that's what's actually happening here. But the 10 simple is literally right where we are right now at 92.37 spot 85. And if we were to play around with numbers here, assuming that this weekly does confirm below the critical zone, let's just see what shaving off 30% of that price action would look like. Oh, that's interesting. It puts us back down into the mid to low 7,000s. Remember the higher term time frames that we were looking at earlier and how that does kind of fit into the narrative there. We could very easily come back down there, especially if Bitcoin breaks below 8,900 or 9,000 on a daily closure and not really destroy long-term structure, and that would be completely fine. If we kind of took like the average of all those downs, that would be about 40% or around 40% maybe on the upper end. And that would put us at the 200 simple and 200 exponential average. That would look a little bit more problematic and also just look fucking nasty, because it's like, man, Bitcoin, you're going to be putting in lower highs for the eternity of eternity since 2017. Well, that's enough for me. No, I'm just having a laugh there. But overall, there's something to say about the strength in traditional markets that's just not being shown in Bitcoin right now. It does suggest that it is relatively weak. And there was a concept that I wanted to relate today. I was talking about it with someone in the program chat, and I said that I would say something about it today. Let me see if I can find it. Hold on. Talking about blow off tops. Where is this? No, I don't think it's there. All right, let me see if I can find it in this one. Oh, Jesus, man. Must be some sort of an MMA match. Everyone's talking about that shit right now. Let's see. Hopefully I can find this. If not, I'm sure it'll come to me, and then we can talk about it tomorrow. Maybe not, man. Maybe not. What the fuck is going on here? Okay, all right. Let's see. All right, I don't think I'm going to be able to find this. It's too far back. All right, fuck it. Okay, well, fair enough. Fair enough. All right, what else do I want to say? We don't have anything to update on traditional markets. I'm bullish on this. I'm looking for new all-time highs coming into next week. Maybe a pullback back down to like 10.7. Where is the last broken trend line? Yeah, maybe a pullback to retest like 10.700 or 10.750. But I'm looking for new all-time highs coming into next week. Still, $11,000 target is viable. So if Bitcoin's going to follow, it's going to have a chance this week. Does definitely give a bullishly twisted bias. Now, if this thing comes anywhere below Friday's low at 10,625.5, I would be calling a big, well, not a big reversal, but I would be calling a reversal for at the very least a medium-term time frame, probably coming back down to the 10,350 base. That would likely be good enough for Bitcoin to come up very healthily down as well. So I'm going to put in an alert there or around there right now. If this alert gets hit, I would expect Bitcoin to break down to the low 8,000s actually. Bitcoin will get hit harder in comparison. Gold, we have nothing to update there. SPYs, same shit. Microsoft, Apple, Tesla, all the same shit. Forex doesn't trade over the weekends, so we only got one game in town, my friends. Only one game in town. And with that said, let's go over here to our secondary reads. Again, I'm not showing this to you because like it's my main way of doing things. I'm showing it to you because it's a weekend and there's not too much to talk about on Bitcoin, and mostly for like the important stuff that I use myself. I've already spoken about it at the beginning of this video, but for the TA nerds out there, of which I'm nerd number one, baby. I'm nerd number one, and you're in the fucking nerd party right now. Get your freak flag flying and fly it fucking high, baby. But looking at this right here, the Trollinger bands are bearish. We still have a negative slope on the on the median 20-something moving average, which is actually increasing its negative slope. It's accelerated. It's accelerating to the downside. And then actually yesterday we did close below the median as well. Now, of course, that is a Saturday. How much do I trust in that? Not all that much, but it is worth noting that if we do the same thing for CMEs right here, CMEs never even really confirmed above. They got one closure above, but that's not good enough. And if you want like a little bit of a sound bit to kind of get rid of a lot of bullshit in your life, if you want to know how to trade the Trollinger bands in the way that they're meant to be traded, and if you hear someone saying anything other than this, well, you can usually write them off very quickly. And it's this: if you are going to be looking at the median Trollinger band to kind of designate targets towards the upper or lower bands, well, you need to see both an open and close above or below it, in contrast to the prior trend before. So in this case right here, you got one close above, but you get no opens and closes above. It maintains a negative slope. And what do you know? It looks to me like we're still kind of pressured down here. So if we are looking at it from a Trollinger band perspective, it is bearish, and it would suggest that we probably do, if we do close this next daily below, especially, what is this, 92.25, which, by the way, remember, that's where momentum turns down on the daily as well. Interesting how these things work out with each other. And this is why you don't need to look at every fucking tool in the history of man, because they usually have confluence with each other. They naturally work with each other. It's all like a fractal identification of how that mathematical equations relate to each other. No shit. But looking at that, it would imply that we probably do come back down and test around 8,900 or 9,000 in this region right here. And seeing as the Trollinger bands are squeezing rather hard, it would be relevant to say that we should expect something similar in move severity to what we saw right here, to what we saw right here, to what we saw right here, to what we saw. We have to go back way too far in order to get the next one after that. But you get my point, right? This is also coming along the side of daily Stoke RSI, my favorite indicator. No, just kidding. Putting in some hidden bearish divergence as well and turning down at the same time, but I don't really trust that one all that much. Daily MACD's nuts is going to also be turning down a little bit here, losing a little bit of momentum, but still kind of chugging its way along. I don't think that there's too much to be said about that. The only thing that I really have to bring up from the MACD's perspective is the weekly histogram divergence. We do see hidden bearish divergence between this point and this point, and I don't believe that we've seen that move play out just yet. I do think that it would be relevant to look for that move to play out somewhere down in this region right here. So sorry, I shouldn't say that I don't think that move's played out. Let's measure it out. All right, so it's giving you about a 15% move based upon that. Is that reasonable? Yes, that is reasonable. I misspoke there. I was wrong on that. But technically speaking, when you do get hidden bearish divergence calls, you will likely come back down and test the median. Let me see if I can find an example here. It doesn't look like we're gonna have too many examples here. Maybe on a daily. Do we have an example right here? Kind of a shitty example right here, but you do have a little bit of hidden bearish divergence between this point and this point, lower highs with higher highs on histogram in the context of a downtrend. Then we come down to the, from what was this, like 10,000 down to 8,900, and then obviously a new trend emerges to the downside on the macro. Maybe not the best example there, but you kind of get my point again. So let's go back into the lower term timeframes here and start to mark off the critical points. So what I'll do now, I wonder why I have this area marked off here. Obviously it's a liquid zone, yes, but I just don't think it's easier to mark off these guys right here. They're just the more tradable right here. And yeah, to the downside, we already got it. So here's what we'll look at from a probabilistic standpoint. To the upside, the critical point for even like a medium-term time frame range move is 94.50 on any sort of a closure. 4 hour or above preferred. 2 hour probably gets it, or a wick above the high of what Bitcoin put in on the 7th of July, which is around 9,500, a few ticks below. So you could probably use both those equally as well. That would very likely extend an immediate target to 9,700. Then we got to be thinking about the 3-day, which very likely plays out a small pullback from there, but eventually works its way up to the top side blue box. And then, could be that Bitcoin actually does surpass it. But if it does, then we got plenty of upside targets into the 11,000s and beyond to speak about. But for right now, it's too far away to care. By the same token, to the downside, it technically is it technically is downside bias here, and I would maintain a downside bias here from the 12 hours perspective as long as we are closing below that last closing high, which is 9,300. This is really fucking tight margins here. I would never fucking trade this ever, to be 100% direct, but for the purposes of thoroughness and, you know, doing some Sunday TA, we can check that out. But basically, I would say I'm not even going to use like a continuation point to the downside here because I don't think that is very helpful. What I would use is 9,000 still, because 9,000 does essentially correlate with potentially the higher term timeframes. 8,900 is where there's no more excuses to be made. I think that 9,000 would get it equally as well, but that correlates to a high term timeframe range move, because we would be looking for a move very likely to 8150-ish region, bounces along the way, like I said, at 8,700 and 8,550, but overall 8,100 would be an extreme likelihood target, plus potential continuation of $1,000 or like 500, 600 bucks lower to 7,500. It's kind of the essence of what I'm saying right there. So let's go back right here. Oh, looks like we already got this. Let's look at the slopes of these rings first. Slopes of the rings are flat as fuck, flat as a fucking doorknob, flat as a fucking door. 12 hours slightly curling up, maybe. I don't think you can make much of that. So let's go to current, and I'm going to use 89.50 for the downside. 94.50 the upside is still appropriate. And as you can see right here, the upside probability is actually a little bit more likely. Remember though, the upside probability only correlates with a medium-term time frame move, which has potential to flow over to like an actual major breakout above 9,900. Yes, but the downside probability at 16.12% correlates with a long-term move as well. I mean, we're probably talking about $1,000 move at that price point or around there. So yes, the upside is a little more likely here, but it is worth noting that both are relatively high. On a daily, that would be a 29.25% probability to the upside, above the upside target, versus 24.81% to the downside below 89.50. Now, it is also worth noting here, and I really want to put an emphasis on this. Bally and Pig's moms right here. Actually, I haven't spoken with Bally for a little bit of time. I hope that he's all right, or if anyone knows what's up with him, that'd be cool. Maybe he's just mad at me, which fair enough. Fair enough. You never know. Looking at the daily right here, Bally and Pig's moms is turning down, and this is the only indicator besides like MACD histogram on the weekly that suggests to me that momentum is that momentum's already turned down. The daily is potential, as we saw on daily Stokes. Daily RSI, we do have some potential hidden bearish divergences on the 12 hour, which I do believe still probably has a little more to play out. So, you know, you could maybe argue for it there, but this is significant here because it's really the first one that told me the earliest if that's going to happen, and that started to turn 2 days ago, I believe. On the 12 hour, it's actually potentially even turning up, as you do see them converge on each other right here between these two oscillators. So, you know, which one do you go with? Well, I don't know. And the 12 hour can still kiss and then open up to the downside once again. So we don't have confirmation on that just yet. And we also don't have a measurement tool for it either. So this is probably the best one that I have that would be suggesting that the obvious proposition is still the downside here. So fair enough, that is in play. And if I am going off of all these tools, if you're kind of like marking up if you're tallying up the points for both sides, I'd say that the bears have more points on their side in the very short term. The bulls still have macro and long-term trend, obviously. The question is, to me, does Bitcoin bottom out, and go sideways for a little bit longer in this area right here without going below, let's call it 8,900, or does it come down to the low 8,000s or the mid 7,000s, put in a major low there, and then give another try to the upside after washing everyone out? I mean, it would be absolutely glorious if it did something like that, but there's no promises in this game. But very, 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 very short term, it would seem that things are angled to the downside for another test down to like 8,900 or 9,000, probably around the time that New York Stock Exchange opens tomorrow. If it is going to happen. By the same token, to the upside, it's a very difficult situation here, just because there's not really too much to be going off of, except for obviously 94.50 the upside and 9,500 on the wick. That leaves up about a $200 range between where we are right now and the top side of that range, and the same thing for the downside as well. But basically, my point here is that is that we're right smack dab in the middle of even like the short and medium term time frame range. Very, very difficult trading there. If I had to pick a direction, I would say we test the downside again. Does that imply that we're going to break the downside? No, doesn't. No, it doesn't. I wouldn't really be looking for like a major downside breakdown unless if traditional markets come down below the critical areas that we spoke about earlier in this video. So I think that pretty much wraps up what I wanted to say. Could it be that Bitcoin gets another test back under this region? Yeah, sure could be, especially if Bitcoin does even take out this last little anemic prior high right here. That would be pretty good. But overall, I think we're in for some more Sunday bullshit, and then probably around the time that traditional markets open up tomorrow, we'll be given clarity on the direction once again. So I'd just be looking really for sideways, maybe a slight twist to the downside, especially if the 12-hour closes below the level that the 12-hour will very likely close below the level that we spoke about. Although there's still 5 hours left until we close, so maybe not. Maybe I'm getting too ahead of myself here. But if the 12-hour does close above 93.50, we'll call it, then yeah, I'd probably look for another test back up here. Does it imply that we break it or not? Well, I'd rather just wait for confirmations. Margins are too tight. And so I think with that said, I'm going to sign off right now. I'd like to wish you the best of the best and the happiest of the happiest. A nice little Goat Jesus Sunday from me to you. And until next time, take care.